Okay. Just I think anybody whose cameras are on, please put them off so that everybody can. Get them. Okay. If you require any to say anything, please raise your hands and we will begin the session now. Okay. The first thing first, like I had mentioned in the group, we had okay. As I had mentioned in the group, I have done a short presentation for uh, basically because looking at the voting percentage, I think a lot of people are new joiners here to the stock market. So this is just a basic presentation on what uh, this market is all about. What are the things that we need to look at, or what is the mindset of people. Okay, so I'll just share the screen and we will start from there. I think there is 100 people limit in this. I guess meeting is full. Is what is the messages I'm getting. Is it? Somebody can unmute and let me know because there are people who are saying that you can't. They are not able to join.
Yes, yes. Google has the limit of 100.
Okay, so now
Okay, so now
there's nothing much I can do. There's 100 people is the limit here. So you'll probably have to you'll probably have to take a recording and share. Okay. Anyway, so I hope the screen is. I hope everybody is able to see the screen. What I have shared.
yes, clear.
Yes.
Yeah. Okay. So now we'll start from here. The first things first. So the first thing that you can see on the screen: conviction in your method and process, no borrowed conviction. Why this is the first thing on your screen is that there are many people who have different ways of going about in the stock market. My method is one of those methods. There are, we have a separate group where me and few of my trader friends, we are around 10 or 12 different people uh, who are in that group. And there are around five or six different ways that there are other people who follow different other ways. Okay. Uh, it is got nothing to do with which way is the correct way to go. But if you want to be successful, if you want to go ahead, there are the guys who have been in the market for long, 5 years and above, or even 3 years and above, they would completely agree with what I'm saying that your conviction and the belief in what you do in your own method is basically what is going to, give you results in the long run. There is no point in saying in following my call or somebody else's call or somebody else's tips or anything because I follow a particular method and it is successful for me. If you can get conviction in your method, that will be great. Okay, so this is the first and most important thing. Make sure whoever is starting off or whoever is doing well in following a particular method, please stay in that. You don't have to change to what I am doing. You can take some pointers, but conviction is the key in going ahead. Okay, now there are these are few I would say points that are key to technical analysis or the markets in general. So don't try to short something which is moving up. Don't try to buy something which is coming down, even if it is your favorite stock, unless there is a proper reversal. I keep saying that in the group as well. Unless and until there is a reversal, please do not exit just because it is falling. No entry without stop loss. I for myself do not enter anything without a proper stop loss. Even if you are saying it's a good company and it will make money, remember there are blue chip companies which are once part of Nifty. You all know Reliance Capital, Arcom, etc. They were trading in 3 digits, 4 digits. Now they're in single digits. Okay, so that is not the case always. In technical analysis, what we do is the motto should be buy at a high price and sell at higher price. You will be buy at high price because the stocks will enter your TA only when it is at a higher price. You will not get a stock which is at an extremely low price because it will not come up in any of your analysis. Okay, don't try to catch a bottom or top or rush to buy cheap or sell at highest price. Many people ask me what is the highest price or lowest price. It is impossible to know. And I am you'll basically not get you don't want to get a trophy that you're saying that I got the highest price or I got the lowest price. It is basically irrelevant in the long run. Sometimes when you see positive news for any stock, you want to buy it immediately. Remember, those who reported that news came to know about it before. See, even if you say that there is no insider trading, this, that, etc., it exists. People know about the news before it comes out. They have already taken. They have already even good results or bad results. People already know about it. Mostly, they have already taken action on those. So before you rush in based on news, please be aware and take action. The stock market by as such is related to money, your hard earned money, so which can affect your family or your life. So take it as a serious business. This is not gambling. This is not this is not something that happens by fluke. This is a serious business. It requires a lot of effort. So please take efforts.
Sir,
Please
apologies to
devote your
butt in, sir. Sir, apologies to
yeah.
butt in, sir. The slides are not changing, sir.
No, I am on the same slide. Is it
Roger.
on the second slide or no?
First, first slide, sir.
It's first slide, sir. Sir, we are still on first slide, sir.
Okay,
I
just
guess, sir,
how
we
about
could.
now?
Yes,
Yes,
yes.
sir. Yes, sir.
Yes, sir. Now this is
Okay,
good.
so basically, if I go on, okay, so if I go on this thing, it does not change. Fine. Okay.
So
So
probably it's
now it
not
is
in
visible,
the.
right?
So probably the window is not maximized and slideshow is not on, sir.
Yeah, when I put on the slideshow, it was not going to the next slide. Or
Understood.
so when I put it off, it is now on the next slide.
Roger.
I think you have shared a window, sir, and the slideshow goes
Yeah.
into a different window. We are
Okay.
comfortable with this.
So
If you can just
this is
knock
fine.
off that the pane on the left, sir, I think this will work. Yes, sir. Thank
Okay.
you.
So again, here, don't try to uh, sh- short something which is moving up. Don't try to buy something which is moving down. Even though this is your favorite stock, unless proper reversal, no entry without stop loss. I have explained this in technical and motor should be buy at high and sell at higher. Don't try to catch bottom or top. Why buy at high and sell at high in technical analysis is because in technical analysis you follow some certain triggers and you will not get and a trigger will not get triggered unless and until there is a price movement. I will explain in detail later. Okay, so you have to buy at high. All right. Sometimes when you see positive news of any stock, you want to buy it immediately. Again, I just explained it a while ago. Please devote your time to study charts after market hours. If you are busy in your job, then use holidays or weekends. There are very high efforts required to learn and apply, but if you do it well, you will earn from the market. Market is I'm trying to reiterate this. Market is not an easy place to make money. Otherwise, everybody would have made money. It is extremely difficult for the first few years. Please understand these few years. Okay, it is. I'm not talking about few days or few months. Will take a couple of years to start making good money consistently. But you have to put in proper efforts. Only then it will start. What are the pointers? Some of the pointers to become a good stock trader. I hope it has gone to the next slide.
Yes, sir. Yes, sir.
Yeah.
Yes, sir.
Okay. What is the reason to trade? Okay, this is very important. When you are entering into a trade, what is the reason? Is it a swing trade or is it a positional trade? Okay, again, explanations on charts I will show later. But why are you entering this particular trade is extremely important. Okay, so if you are entering even a good stock like Reliance, if you are entering it for swing, then your lookout, your analysis, everything is different from if you are entering from position. Your view, whether it is weekly, monthly, what time frame you follow is completely different. You should know your stop loss. So stop loss is something that you are basically what you are saying is I am ready to take that amount of loss. So if I enter into some trade, I know that it is a wrong thing to ask what is my target. The first question should be what is my stop loss, because that amount of loss is your confirmation or the belief to enter the trade. So if I say that my stop loss is 10%, I am willing to take 10%. Are you willing to take a 10% stop loss? If you are not willing, then don't enter the trade. Okay, because without stop loss, you'll find many trades, you'll find many setups, but it's not really possible to trade. Conviction, which I already told about. Trade with the trend. Don't try to go against the trend. Something is moving up. There is no point in saying that this is going to go short. Never try to catch a falling knife. You can buy at a little high price using a reversal and sell at higher, but don't try to buy at bottom. Nobody knows it. Okay, there are many who will try to, okay, this stock has fallen 5%, 10%. Can I buy it? I don't know. It can fall another 10% tomorrow. Okay, once you see a reversal, only then you buy that stock. I know you might have 10% or 20% higher. Okay, but you may or may not be able to. Uh, I mean, that will be a better way of buying rather than buying directly at the bottom. Let your profits run, cut short your losses. Correct? Business. Okay, now this is very important. Businesses do not close down on market crash. A lot of people get panic. The market is crashing now. What will happen to my business? See, if you have tomorrow, if the market crash, do you think Tata Motors is going to shut down? No. Tomorrow, if Mr. Modi loses the election, do you think Tata Motors will shut down? No, it will not shut. Good businesses will continue running. Whoever is the prime minister, they will continue running no matter what happens. Right? There is you are in the cash segment. You are not in an FNO segment. There is no reason for you to get extremely panicked. If you are in a good business and your view is long term, please remember the business is not going to close down. Okay, so a lot of people will see, it is short, it has gone down 5%, it has gone down 4%. What will happen? No, no, this nothing will happen. Be realistic, don't expect magical returns. Many people think of returns of 50%, double this, that, everything. That does not happen. Be a realistic. You start off, if you are starting off in the stock market, you should be able to beat FD returns, or you should be able to beat returns that a conservative mutual fund is giving. Mutual funds on a conservative basis give 15% returns. You can target 16%. If you can target 16%, you can make 16% returns in 1 year in the stock market when you are starting from zero. I think you are doing a very good job. Okay? Do not go with 50%, 100%, 200%. Those things are not possible when you start, or even not possible for most of the times. There is no holy grail. Keep your chart simple and clean. Again, there are lots of different technical or other indicators. Those indicators can keep, if you put in a lot of indicators, you are not going to really be able to make much sense in the chart. You cannot time the market. Okay, when you cannot time the market, basically means again what I told you first. So catching the top, catching the bottom, don't get into that business. You are not in the business of timing the market. You are in the business of trying to make money from the market. Now we come to what is technical analysis. What is technical analysis? Basically, technical analysis is a methodology of forecasting price direction using past data such as price and volume. Price and volume are the most important aspects. Those are the only two things that are completely current. Everything else will be lagging somewhere. Okay, technical analysis is mostly used for trade, where fundamental analysis is used to make an investment. This is again very important. Technical analysis, from a technical analysis, you can go and make a trade. You can go and make an investment, but it is very difficult using technical analysis only to go and make 10x or 20x returns. All right, technical analysis will give you a good point of entry. It will be very extremely useful in swing trading. but it is not extremely useful in making a long-term investment. Long-term investment needs fundamental analysis also, or basically it needs fundamental analysis. In other words, technical analysis or charting is the study of price and volume behavior in financial markets in order to anticipate their future performance. All right. What are the principles of this technical analysis? Price discounts everything. Price tells everything you need to know. Just all the Gujarati says, "Bhav Bhagwan che." So price will tell you everything you need to know about the stock expectations, regardless of result, corporate action, business development, political event, calamities, whatever is there. Everything will get factored in, resulting to the share price of the company. Price will move in trends. Stock price cannot move in one way always. So anybody, a lot of people will come in new. They will be get to say that is this has this the stock has gone up, it is now coming down, what should I do, etc. See, you have to remember that this the price will not move up always, it will not move down always, it moves in certain trends. If moving up, then it will continue to move up till any price reversal occurs. So in technical analysis, in swing trading, what we do is we try to forecast the possible direction of the share price and simply take that particular trend. History repeats itself. Technical analysis exploits the idea of predicting human behavior by identifying certain characteristics of the price action observed that tend to have predictive value. Again, you will probably explain this when you look at charts. Price is a reflection of everything: greed, sentiment, effects, etc., etc., everything. A larger trend cannot be manipulated. Any event, political, geopolitical, even a manipulation in a stock, if it is a quality stock, can result in short term or intermediate change, but larger trend will remain. Okay. Most important, price is supreme. Whatever you see in the price, you have to accept it. Don't try to fight. A lot of people will have their whenever you start with the stock market, you have a preconceived notion of this is what is going to happen, this is a stock, this is what will happen, and you try to fight the price action. Don't try to fight whatever is you can see on the screen. Okay. The market is supreme. You are not supreme. Please understand that. The averages discount everything. Okay, market reflect every possible knowable factor that affects overall supply and demand, result, news, absolutely everything, even war. The market will quickly discount such occurrences in their price, and it will start taking its natural course. Very important, averages must conform with each other. So all leading averages must conform. So if it's Nifty, for example, if in Nifty mid caps or bank Nifty, for example, decouples with Nifty, then the trend of Nifty will resume and reverse. So if Nifty is moving in one direction, Bank Nifty is moving in direction, that thing will not last for a long time. If mid caps and small caps are performing and Nifty is not performing, all the indices have to conform with each other for the market to move in a particular direction. Market trends have three phases: accumulation. You know where is I'm sure most people will know this: accumulation, public distribution, and public participation and distribution. So basically, accumulation is where is happening. I mean, you can Google these three things for people who are new. Others already know this. We are probably currently around the distribution stage. Volumes must confirm trend. Very, very important. Whatever trend is happening, whatever, if it is an uptrend, if there is a breakout, if whatever is happening in the price, volume has to uh, increase. Okay, you should see a spurt in volume. If the price is going up without volumes, there it is not a proper price increase. If the price is going down without volumes, again you can disregard. Trend is your friend until it breaks. A trend remains intact until it gives a definite reversal signal. So don't go against the trend. Your only task is to trade in trend direction. That is, buy at new swing high with stop loss of higher low, and sell at new swing low in downtrend. What is the meaning of this? Once we go to charts, I will explain. But do not think how high will this go. It will go high till it reverses. Do not think how low, how much this will fall. It will fall till it reverses. Okay. Do not trade in anticipation. Okay, this is already gone 10%. This is enough. No, no, it can go 100% also. Okay, close is the most important price level. So if your whatever time frame you are trading on, if it is whether regardless of 1 hour, day, 15 minutes, whatever, the candle close. Okay, if you, as far as we are looking at investment or trading, etc., the daily close is the most important price level. All right. Now, technical indicators are the ones that I had given before. Technical indicators are used to indicate trends. There are two types of indicators, leading or lagging. The most leading indicator is price action and volume. There is nothing that beats it. All the other indicators, even though I'm telling leading indicators is RSI, it is still lagging to price and volume. Okay, make it very clear. Now, these are the indicators that I follow, which is why I am explaining in short. Okay, explaining an indicator like an RSI would probably take 4 hours. I am just giving you a short explanation of what an RSI is. Okay, an RSI basically identifies entry points before a new trend takes place. So you have price and volume. You have RSI. RSI is a momentum indicator. You have ADX, which I have told before. ADX is a trend indicator. Okay, lagging indicators are EMA, SMA, etc. So what is an SMA? SMA is basically a basic indicator calculated rolling basis. So a 9 day EMA or a 9 day moving average basically is a total of last 9 days 9 days closing price. So once you see a candle, this thing, the last moving days closing price divided by 9 will give you a 9 EMA. Short-term moving averages. Now, these are things that you can make a note of. I will also share this PPT on this on the group, so there is so everybody can access it. The short-term moving averages. So, if you have a short-term view, your short-term moving average is 9, 21, 50. I use 918, but everybody can use 9, 21, 50. For long-term moving averages, 63, 100, 200. Okay, 200 is the most important if you are looking at long-term aspect. Anything under 200 is not an entry yet. EMA has a tendency to be a bit choppy. If there's a difference, if you look at my ribbon, which I have mentioned, I always have two EMAs and two SMAs. Okay, EMA is a bit choppy compared to SMA, it, but EMA gives a early entry, but it can give a false positive also. SMA is a bit slower, but it is lesser choppy. So I have a mix of both in my setup. This is a system on moving averages that can be followed for trading. This is something that I always explain or I always mention. The slope of the moving average and distance between the moving average and the price. Okay, less distance is good. Price and EMA are very close friends. They like to be together and not apart. They will do everything possible to meet each other once the distance is. Now, this, whenever there is a distance between an EMA and the price, they will always come to meet each other. Now, that can be due to price fall or it can be due to time correction, whichever case. So, if a time corrects, your average will again come up and it will meet the candle. Okay, so this is something that I look at whenever I'm taking a trade. Buy sell crossover of two moving averages like 918, I will explain in the chart. Buy or sell on close of price above a moving average. You look at previous levels. Convergence. So convergence is something that is proving very good nowadays because we are in an extremely high bull market. So selected moving averages, like I said before, 9, 18, 100, 200 is what I have selected. The biggest advantage in this is in trending markets. Currently, we have a trending market. You can make a huge amount of money when you enter a trade on that crossover. Okay, all these big moves that I am getting are simply on this convergence theory. I will show you a few charts also later, which you can understand. Major issues. What are the major issues with this EMA system? When the market trends sideways for a long time frame, there will be a frequent crossover up and down. Okay, so in this crossover, what happens is whenever this crossover goes from positive to negative, your stop loss is hit. So if there is a sideways market, there will be frequent crossovers and your stop loss will keep getting hit. So now in a non-trending market, this convergence theory will not work. The other two I use MACD, ADX. ADX is trend strength. Buy when DMI crosses over. I mean, if you have gone through what is an ADX, you this is your buy signal plus DMI crosses over minus DMI. ADX is upwards 20, 25 or 20. Will offer better swing and fast move. DMI minus over DMI plus and ADX is rising upward about 25 again. Will give you fast downside move. Okay, ADX is trend. ADX is a trend. If to tell you in short layman's words, let us say that you know the first is one candle. That is the first thing that happens on any time frame. That is the price action. You take 10 candles, that will result in RSI. Okay, you take 10 RSI, that will result in ADX. Okay, so your candle will result in momentum, your momentum will result in trend. This is very easy for me to explain in 1 minute. It took me almost 3 to 6 months or 4 months for me to actually replicate how this happens on a chart. Okay, MACD is again moving average, the divergence which you can see on your, it is an indicator. Buy when line signal crosses above MACD line above zero. Sell when it crosses, when there's a negative crossover below zero line. Bias bearish below zero line, bullish above zero line. Okay, this is again seen in the chart. I will put forward some charts and you can understand what I'm saying here. RSI. Now, this RSI by itself, like I said, to understand this concept will take around 3 4 hours and to replicate it another 3 months. But RSI is a momentum indicator. Okay, RSI is a measurement of power of sellers versus buyers in the market. In other words, RSI is a momentum indicator which is plotted as a line on the graph between 0 and 100. What are the things to remember? When the line goes below 30, market is, or your stock is considered oversold. When it is above 70, it is considered to be overbought. Bullish momentum when RSI is rising and above 50. If it is falling below 50, bearish momentum has started. I keep this, the default range is 70-30. I keep it this range as 70-40. Now, how does the market or your particular stop momentum shift? Again, the bullish range is the market, the RSI oscillates between 40-80. Super bullish zone is 60-80. Bearish is 20-65. 20-40 super bearish sideways. Okay. Sideways range is the most dangerous one when it oscillates between 40 to 65. In this range, generally there is this whipsaw effect, and we should generally avoid trading when RSI is under sideways range. Now, this range is specific. It is not like, it is not constant with every stock. There are some stocks, if you're looking at the stocks that are trending nowadays, if you're looking at Mazda or you're looking at Cochin Shipping or if you're looking at any of the shipping companies, they have not come to this 20. They are now in super bullish range. So you don't wait for the stock to come down to 40 to buy. You wait for the stock to be 60, 65 or 70 to enter that stock. Okay, so it is specific to, you will not find this 60 to 80 zone in, let us say, something like ITC. Okay, ITC tends to go between this 40 to 80. Okay, so this is specific to stocks, specific to index. The index will also be between 40 to 70 range. Okay, 70, 75. So this, with time, you can understand what is the range that my stock generally, or in this current market scenario, what is it oscillating between. And that is how you can use this range to buy the stock. So if you are into, let us say, if you are into swing trading into Cochin Shipping is currently going at 90, 92 range. If you sell it and you want to rebuy that stock, you can either look at price or you can look at RSI. You can basically trade a stock which you know very well, not looking at the price action, only looking at RSI also. Okay, I take a lot of trades in Nifty and Bank Nifty, only looking at RSI, not even looking at price action. The next, okay, this is regular divergences that you have to look at, bearish, bullish. So what is a divergence? Divergence is a divergence between the indicator and the price action. All right. So if your so this is your price. So your price over here, if you look at, is making higher high, higher low. Correct. Let us say this indicator over here is an RSI. So your RSI is making so your indicator is making lower high. So this will be a bearish divergence. So higher high, lower low, higher low, higher low. Over here it is making higher high, lower low. In this case, this is a regular bearish divergence. If you have a bullish divergence over here, you look, your price is making lower low, but your indicator is making a higher high. This is a bullish divergence. Now, this again, remember, this divergence is on closing basis. So you can see the divergence very well for people who are starting off or who have not, who don't have much experience in looking at divergences. You have to change your chart type to a line chart, because line chart will take the closing basis price. Okay, it does not take, if you're looking or you're at your regular chart, you will not understand what is, you might not realize what was the closing. Okay, so now these are just regular divergences. Then there are hidden divergences. There are other divergences also in technical analysis, but this is enough to start off with. All right. And the last thing is Fibonacci ratio, which I had also said. What is a Fib ratio? This is just a small this thing on what is a Fib ratio. Important Fib ratios are given here for you to go through. Okay. There are two things to look at when you're looking at, giving resistances or targets: Fibonacci retracements and extensions. So Fibonacci retracement levels are those that are lower than 100. So if there is anything that is lower than all-time high, or if you are looking at something that is between the previous swing, then you look at Fibonacci retracement. Any stock that is at the all-time high, and you want to look at what is the next target. One of the ways of looking at the next target is a Fibonacci extension. How to draw for an upward trending market? It is drawn from low to high. This is low to high is the swing high to swing low to swing high. For a downtrending market, from high to low. How to draw extension? Major swing low to swing high to next low. Now, what this means, I will explain it when we look at charts. Okay, now this is just the basics of the things that I have in mind when I am trading, or I have in mind when I am looking at charts. Okay, this is the basic essence of what I look at. All right, so now how does this translate into charts? Let us go into charts and see how this is going to get translated into. Okay. Was this decently clear for people who are here?
Yes, sir.
Now we will go directly to a chart for where I will explain what this basically means. I hope everybody understands, or has, I am expecting that people know what charting is, because I will not be able to explain what charting is. And I will just share the screen. Home can be shared here, right? Or only,
Anything must be shareable, sir. So not be an issue.
not so. Can you see the screen here? I'm just showing some in one of the charts that I wanted to check. Okay,
Yes,
now
sir.
this is okay. You can ignore uh, the stick, but this is basically my uh, default setup. Okay, EMA ribbon 9, 21, 100, 200, RSI, ADX, ADX. The name of the screen, the name of the this thing is DMI, not ADX. Okay, the name of the indicator. So if you go to indicator, DMI, directional movement indicator, the directional movement index. That is the name of the index of the indicator. And MACD. MACD default value, there is no change in MACD. RSI, like I said, you go to settings, I only change the RSI lower band to 40 instead of 30. All right. Everything else remains the same. For ADX, what I do is I just, for my this thing, I keep the ADX screen as ADX indicator as black, others as blue, or as they say green and red, or blue and red, whatever. So that understands that DMI plus is green, DMI minus is red, and ADX is just easy for me to understand. Volume on the chart. All right. So everybody wanted to basically know what is it that is. So one of the ways that you can take a trade, okay, is where you see a convergence of EMAs, right? When I told convergence of so this is one of the criteria where a trade increases, where you can get a very good result. You can see here this is I am not invested in this share, but I was just looking at it for an entry this week. Can you see this particular point here where there is a convergence? Okay, a convergence over here of 9, 18, 100, 200 EMA. Okay, whenever you see something like this on your chart, on whatever time frame it can be, okay, that is the time when you have a major spurt in price. Okay, this generally gives a very good result. So even if you have taken when you even if you take an entry out here, you have seen approximately what 1% over here. Next day was sorry, this is 15 minutes. Let me find, okay, see something out here. Okay, when you have a proper crossover, I will show you a proper crossover. Is one of the charts that I had taken. TVS Electronics. Okay, it is easy for you to understand on the TVS Electronics. Okay, this is a TVS Electronics chart. Okay, this is a crossover over here. You can see this 918 crossover, and the next 15 minutes gave a 10% move. Can you see that? Somebody can say yes or no.
Yes,
Yes, sir.
sir.
Yes, sir.
Yes, sir.
This is what I had explained once, where so okay, now this is in terms of trading, but even if you look at daily charts of any uh, if you look at a daily chart of any script, wherever you can see this cross happening, you can be assured that 8 out of 10 times you will get a very good return in a trending market. Okay. When we are looking in terms of investors, or when we are looking in terms of people who are not on the screen on a daily basis, the most important thing to be seen out here would be MACD. Okay, and MACD cross that happens on a daily basis above zero. Okay, is extremely essential, is extremely good for people who are looking to enter scripts, or who are looking to uh, yeah, if you look at TVS Electronics itself, you can see an MACD cross here, MACD cross next to zero. MACD, this is zero. I will show you. I will. Yeah. Has this happened at zero? Yes.
Yes, sir.
What is the date?
Yes, sir.
The date is 10th of June. Correct? Okay. What has happened on 10th of June over here? 10th of June. the price was 328. If you have on that 10th of June, wherever you entered this price, 328, you have gone up to 372. Right? What was the trigger over here? The trigger over here was an MACD cross at zero. The entry I would not have taken. If I had taken an entry over here, it would be somewhere. I would not have taken at 329. I would have taken an entry at around 330. Why? Because this big black red line over here is a 200 SMA line. I do not like to take stocks that are under 200 SMA. Correct. So I would have probably not taken an entry here. I would have maybe taken an entry once this stock closed above. That is at 336 on 21st of June, not on 10th of June. So if I have taken an entry over here on 21st June, I have still moved from 321 to 380, right? And I'm incidentally holding TVS Electronics. All right. So this is one of the entry ways that you can take. This I'm giving an easy entry way for an MACD cross. MACD cross near zero for anybody who is starting is the best way to take entry. You have to look at other aspects also. Like in this aspect, MACD cross has happened, but there is no entry as such because of this 200 SMA resistance. So you take an entry later. But keep this on your watch list when, as and when you want to take an entry. Right? I will show you another entry that I took RBA, Restaurant Brand Ratio. This is something that we took a few days ago or just one day before on Friday. On the group, I have given a Restaurant Brand Ratio, RBA. Okay, RBA has, why, look at RBA. इसके अंदर you can see this MACD cross near zero. Now, there is an RBA, there is an MACD cross near zero. My RSI is above 50. It is at 62. Even if I draw a trend line here, what happens? Yeah, it is near. So this is near resistance, but it has crossed 200 MA. Yes, I have taken an entry in this stock. Look at the volumes. Look at the volume buildup. For the last 2 days, volume buildup has been good. Correct? Look at the weekly, or look, even if you look at daily over here, what is, can you see this? There is a kind of a cup and handle being formed over here. People who are, if you do not know, so this is a cup and handle formation being done here. Okay, so cup and handle formation is a very powerful one. Cup and handle, if it gives a breakout above 114 or 117, the first target would be probably around 12 points. So 114 plus 12 points, and other complete target could be around 17 points. So 113 plus 17, that is around 130. So this is a fib ratio 133. So, and this is the next previous swing high. So around 130, 133 is where I am expecting RBA to reach. Okay. So I am just giving you, it is difficult for me to tell you how to enter, what are the different aspects of entering stock. But this is the one of the most powerful ways of powerful indicators to enter. MACD cross near zero. Okay, MACD cross near zero. If you go on charting, you will get a lot of scanners where you will find MACD. I'll also share a couple of scanners on our group later where you will find MACD cross near zero. You just sort it based on volumes and sort out the stocks after you do basically chart. Other one of the other stock that I am looking at, you can say, okay, Nahar Poly, everything in Nahar. Okay, if you look at the weekly chart, the week has finished now, right? If you look at weekly chart, a weekly crossover has happened and it is now coming near zero. So if you look at this Nahar Poly or Nahar, any Nahar spinning or any, this basically Nahar Industries by itself. Okay, all of this has undergone weekly crossovers. The Nahar group, I would expect the Nahar group to give good returns in the next few days. Okay, which stock to enter? that is a different question. But this is one of the ways to screening stock. There are 10 different ways, but there is no way I can tell you each and every way to enter a stock. Okay, after that you put in. Now, if you look, I'm just looking at NAR Industries. Okay, I remove this. This is a very clean chart. Okay, there is a weekly crossover. If you look at the EMA, there is a EMA congruence over here. The chart is almost at resistance. If I draw a trend line over here, you can see a kind of, this isn't a cup and angle, but there is a kind of a flat breakover possible. Correct? So I would basically shortlist the stock and monitor it somewhere around 140 to 150 levels. Any break over here, I would end. Okay, this would give me a nice target of around 180. Yeah, this is 97 to 150. Yeah, around 40 points, 180, correct. 30 points. Complete target would be around 40 points if it lasts. And this will come very fast because my RSI is, yeah, if you look at weekly RSI has given a small breakout. This can be a good start to look at. Okay, so this is just a couple of indicators that uh, I have. I'm showing you on how you can enter. A lot of uh, questions that we had was for beginners. Now, okay, so let's go to this. What beginners capital management? How to divide capital, swing, long term FNO. There is no FNO. Okay, FNO does not exist for beginners. FNO does not exist for anybody who's in the market for less than 2 or 3 years. Okay, swing and long term. Okay, see, it will depend on what is your outlook towards the market. Every person is different. Okay, if you are confident of swing trading, if you are very good at charting, if you can enter and exit, then you can give 40%, 50%, 70% to swing trading. If you are not, then put 60, 70% towards your long term and the remaining to swing trading. There isn't a thumb rule as such, but make sure that you know what you are good at. How to plot entry exit levels. Now, entry levels, I have given you an example of how to give entry levels. Okay, entry level, I will again, if you want, I will share. Let me share one the same Nahar with you. This is Nahar. What is my entry level? If you are good with charting, what is my entry level? My entry level here, I can see that there is a flat
Sir, we
breakout
can't see the
possible.
chart, sir.
Can you see now?
Yes, sir. Yes, sir.
See, this is Nahar industry. This is on my short list. Okay, because it is basically fulfilling almost all of my criteria. Okay, when will I enter Nahar Industries? I will enter Nahar Industries if if I can see that the price has broken 100 and what 50 levels. Okay, current price is 142. If I want to enter now, if my total allocation is going to be 1 lakh rupees, I'll enter with 30,000 over here. I will not enter completely 1 lakh. If my allocation is 20,000 rupees, I will enter with 8,000 rupees over here. I will not enter the entire thing because there is, if you see here, this has got rejected from this trend line. There is a chance that it can get rejected over here as well. It looks unlikely because there is a RSI breakout. Okay, so I am expecting Nahar to do very well. So I will, to be safe, I will enter on break of 150, but I will take an early entry. Let's look at, see, look at this daily. That was a weekly chart. This is a daily chart. Okay, daily chart looks very interesting to me. Daily chart is very good. As soon as it breaks 140 to 143, it stays somewhere here, I will enter. Correct. What is my stop loss? My stop loss, if I'm very, again, it will depend on how much is my potential to, how much confidence do I have in this setup. I have good confidence in this setup today. Okay, looking at even on a bigger time frame, weekly, I have very good confidence in this setup. If I have very good confidence in this setup, I will keep my stop loss below this 130. Okay, I am entering at 145. I am keeping a stop loss at 127 even. Right? Because this setup looks poised for a good zoom anytime soon. Again, remember my entry at 144, 143, 44, whatever, if it persists here for 15 minutes, is not going to be a full entry. It is a part entry. Right? So I am pretty much confident that I will enter here. My stop losses are based on two, three things. My stop losses over here, if I'm looking at EMA, if I don't have confidence, I will exit as soon as the price closes below 140. Okay, if I am very, very close, I'm looking at swing trading only. But with confidence, the first stop loss will be around 135. You see this good candle of 4%. You see there is, even if you draw a small trend line here, there has been resistance. If you look right till the left, there has been decent resistance around this 135 mark. So anything around below 135 close, okay, close, candle close, daily close can be my first very smallest stop loss. This 200 SMA comes to 131. 131 can be my second stop loss. Okay, a decent stop loss. But since I have very good confidence over here, you see this accumulation that is out here. This comes to around 128. Okay, 128 on a weekly time frame is near. If you look at it, it comes near this 918 cross. Well, this can be a very safe, very good stop loss for me. I don't expect my stop loss to be hit, but I will still keep this stop loss at 128 weekly close or daily close, whatever the case may be. And my target at 180. Okay, why is my target 180? Somebody unmute. Can you please mute yourself? Why is my target 180? If you look at, I mean, if you know how to calculate based on this formation, this is 40 points. Okay, these 40 points is giving me 180 around. Also, there is a big candle over here. Okay, so these big candles, that one big red candle, one big green candle, is the base of this also comes around 180. I will expect a decent resistance to come around 180. Other way to calculate Other way to calculate my resistance could be fib ratio. Here you have fib. You take your fib, just plot it over here. Okay. What is the fib ratio come here? 178. Yeah, 179. Yes, you can see that on the screen. Now I have my own trend line that I had just drove came to 180. The fib is telling that it will come to 179. Fib is saying 161. 161 is my previous swing high as well. So if you want to just exit at a very small exit, you can enter at 161. But 180 is coming at a good fib ratio, yes or no? So 180 can be my very probable target because my trend line plus the fib is agreeing to what I'm saying. I would enter Nahar Enterprises with a stop loss at 120 with a target of 180. What is my RR? From 140 to 120 is 20 points or 22 points. So I have a 22 points risk. I have a 40 points gain, which is possible. That is 2 is to 1 RR. Very good. Very nice. I am very happy with this trade. I will enter this trade. Since a lot of people wanted to know how is the psychology of me entering this trade, I am giving you an example. You can follow Nahar Industries for next week and see, or next 2 weeks or a few days and see whether this comes out to be true or not. Remember, if it hits this 120, 118 range, you have to exit. If it reaches 180, you have to stay. But okay, if you have confidence in Nahar Industries as and Nahar Enterprises as a medium or long term investment, then what do you do? What is your 200 SMA on weekly? It is 109. If you can afford to to 109, please be free to stay for 109. Are you understanding? I hope I am being clear over here.
Yes, sir.
Yes. So people who are somebody who has been in the market for a while will understand what I'm saying. People who have not been in the market, please try to understand as much as you can. But this is why entry criteria, this is my trade criteria, this is my criteria to exit. Okay. What are the targets? The targets over here are very easy. Okay, I am 161 is my previous swing high, confirmed by fib. 180 is confirmed by what the trend line I drew also by fib. It can go all the way high up to 238. Does that mean 238 will come? Not necessarily. But this is the probable target that I can see. Okay. How do I trail? Now, how do I trail? The second thing is, how do I trail up to here? Okay, trailing is very easy. Once you enter, all right, once you enter, you trail either if you are a very short-term trader, you trail on 9 EMA. What do you mean 9 EMA? When you get a decent close below 9 EMA, you book your profit. Okay, if you are a slight, not this, but you remember, if you are trailing on 9 EMA, you might get 10, 18, but you might, your stop loss might get hit at 160, your TSL might get hit at 160. If you are extremely, very jittery, you want to just enter and exit, this one will hit 160 soon. If and when it hits 160, you exit. Don't look for anything later. So when you say that, what is my first stop, what is my first target, etc., etc. So if my first target is 161, remember, I do not know at 161 whether this will go up or this will go down. Okay, nobody will know. My first target is 161, my next target is 180. What if it gets reverses and comes down? Then what to do? Okay, so those questions are always there. So either you exit at 161 completely, or if you are into swing, what you can do is if you have taken 100 shares, you exit 40 shares here, keep the remaining 60, trail the remaining 60 at 9 EMA. If you want to keep it at 179, what do? You trail at 9 or 21. Make sure that, see, I will give you an example of ACE. Okay, this is ACE. Okay, I had taken an entry in ACE at 259 or something like that. About 259. I don't remember. Somewhere over here. Long. Can you see the chart of ACE? Everybody, it is visible.
Yes, sir.
Yes. Okay. So if you have trailed this to 18 or 21 EMA, if you are an investment kind of a person, okay, if you have taken an entry, so if you have taken an entry, let us say at this breakout, okay, can you see that your stop loss has never been hit? Not once. You took an entry at 338, you have trailed it to 1540. This is 9 EMA, this is 21 EMA. This is a weekly chart. I will tell you that what will I tell you after if you take an entry here, your first target is, let us say, 409 or something based on some, our other various ways. If you are trailing it at 21 EMA on a weekly basis, your stop loss never got hit. Has it closed below 21 EMA anywhere? No, it has not. Okay. If you look at Cochin shipyard, for example, okay, what is my entry for Cochin shipyard? It is at 775. Sorry, 424 or something like this. What? Not 424. I'll have to check. I think 775. It has gone to 2,924 currently, right? Your stop loss has not been hit on even the shortest time frame, 9 EMA. Okay, where did this crossover, where did this positive crossover take place? This positive crossover took place at 246 in May 2023. Now we are in July 24. From 246 to 2800, you never got an exit signal if you are in a long term process. Of course, this is coaching shipping. Coaching shipping, has moved on a different trajectory all by itself. It is not necessary that every stock that you enter will move at this way. But I'm just giving you one example of how you can trail. Okay, where did your positive crossover take place? The first near zero, 29, no, 2nd May 2023 on weekly. Okay, what was the price on 2nd May 2023? Okay, 2nd May 2023 incidentally is also the date when you got the positive crossover on 9 and 21. No, it was slightly earlier. The 2nd May was 275, right? If you took this entry at 275 on MACD cross based on 921 crossover and trailed it to 21 EMA on weekly, you could have taken Cochin at 275 and trailed it till 2900 without any stop loss getting hit anywhere. Without any, in between, you had that Madhuri Puri Booch thing, you had the election drama that happened, you had everything that happened. But your stop loss never got hit. Correct? If you have taken an entry at 775, right? Okay, now this is the way. Okay, now you are asking how the other way to take, uh, find out a target when when your stock is at all time high. Okay, let us go to daily and let us say you have taken an entry somewhere 775, etc. Here, 775 on 10th of Jan. Okay, your stock has gone to 1347 and it is coming down. Now, what is the way, or it is somewhere here, what is the way to understand what is my targets in a clear blue sky? Clear blue sky, what do? You take your major, you go to trend based fib extension, you take your major uh, swing low. Let us say you are looking at this one, you take your major swing low from here to major swing high. You can see this swing and then the next swing low, and you let go of the cursor. Okay, you see this 1, 2, 3. Okay, even if you don't want it here, if you want it to take it here, you can do it this way as well. Okay, you will get your fib targets marked. So Cochin shipping is almost close to the fib target of 2,960 odd. Okay, yesterday it went to 2,924, extremely close to what is the fib target. Should I exit over here or not? Look at your RSI. RSI is what? RSI is 82. What does Cochin shipping has a history of? Cochin shipping has a history of RSI around 90, 85. If you draw a trend line here between these two RSI grade, you will probably hit your target very soon. Okay, so Cochin shipping might reverse at an RSI of 84. At an RSI of 84, it might go up to 2,962, 2,907 or something, and it might reverse. Why will it reverse? Because look at your weekly RSI. What is your weekly RSI? Weekly RSI is at 92. This is unsustainable. What is your monthly RSI? So just 1 month. So it's sorry. What is your monthly RSI? Monthly RSI is 96. A monthly RSI of 96 is close. If you Google and figure out how to calculate RSI, you will understand that this RSI is completely unsustainable. Okay, this has to cool off. This has to cool off. So if you exit this price, if you exit Cochin shipping now, if you are a swing trader, you exit at 2009, 3000 somewhere or something like that. Where should you take an entry? Where will you take an entry? You will take an entry at some supports. What are the supports over here? You have a support somewhere here. You see this trend line, wherever this goes, 3000, etc., it will come to retest this 2700. It will come to retest this 2600, which is an fib ratio. This 9 EMA is at 2439. Your price is at 2800. The difference is close to 400 points, 400, 450 points. These 450 points has to be met. It has to. You see this? This is the normal course of action. When I say that these are friends and they will come to meet them, what do I mean? When there is a big difference between the price and the EMA, there will be some sort of correction and they will come to meet each other. They are very happy when they are together. When this runs away, he will come to meet again. Okay, whenever this happens, whichever time frame that you look at, it has to, it has to move together. Do you understand it? Okay. So now the price is at 2,800, your EMA is close to 2,040. This has to come close. Correction is due in shipping stocks, whichever shipping stocks. So when people are asking, should I enter pitching shipping? No. Tomorrow this can hit, Masdok can hit another 10%. I do not know. But there is a huge difference here. This has to come and somewhere like this. Once you start seeing this this consolidation going on, then you can think of re-entering these stocks. Okay, so this is one of the way to plot entry exit levels, how to trail your stop loss. What is the stop loss for swing? How to go about trailing stop loss? Against trailing stop loss, what is your outlook is important. If your outlook is quick swing trading, then you look at hourly. Your TSL is 5,591. Okay, Abhi, there is so your stop loss for a very short swing trading would be 9 AM around 5,540. And hourly close below 5,540, I would exit Nasdaq. Okay, if I have a slightly longer view, then my trailing stop loss in Nasdaq for daily is my ratio, which is 5,260. Closing below this or closing below 4,768. But 4,768 is 1,000 points. Can you afford 1,000 points? If you have taken an entry on this breakout because you are a swing trader at 4,300, can you afford to stop at this 300 points? Is something that you have to is a call that you have to take. I would keep a steady stop loss somewhere around TSL around 5,260, not lower than that. Okay. If you are a slightly long term trader, then your Masdog TSL comes to 3,876. That is 2,000 points today. As the weeks go by, this will go up. Okay, it is not like it is 2,000 points today, but today it is 2,000 points. This will start going up as soon as the weeks move. If you want to catch a huge move, if you are fundamentally sure that Nasdaq can go to 10,000, okay, my next target over here seems to be 7,000 and 10,000. If you are sure that Nasdaq on a fundamental basis can go to 10,000, then you trail 9 EMA or 21 EMA on weekly. It is up to you. But does this constitute a new entry? Absolutely not. There is no point in taking on any time frame, daily, weekly, hourly. There is no new entry in Masdog. If you have taken it 4,000, 3,000, somewhere over here, of course, continue trailing. The best entry is around 2,000. Can you see this consolidation here? This is a super entry. This consolidation breakout was a very good entry. Even if you have taken an entry at 2,700 odd, there is no problem. You can still trail it. But remember, your trailing stop loss currently is 2,000 points. Okay, 3,800 to 4,800, 5,800. This is 2,000 points current difference between the price and your EM, which can be met. Of course, can be met here, but however it is. Okay, so these are the various ways, simple ways of how you can trail your stop loss. There is no point in asking where should I trail. What is your outlook? Why did you take it? Did you take it on a daily? Did you take it on an intraday? Did you take it an intraday over here? Then this is 9 AMA. Your stop loss got hit at 5,628. Okay, you took at 5,500, you exited at 5,628 or what 630, you got 100 points, be happy with. You took it for a long term view, your stop loss is another 2,000 points away. But RSI is extremely overheated, you will see some correction here, definitely. If you don't want to wait for stop loss and you think that okay, Nasdaq has run its course, you exit here. If tomorrow it hits another 1,000 points, you exit it and get out. Okay, these are the various ways that you can do this. The other one more way of doing is a trend line. Okay. This trend line from here, if you take your highs over all the highs, where does it reach? It will reach to around 7,200. That's around 1,500 points. Okay. So 1,500 points approximately, or 1,200 points approximately is what this can go up to, milestone. But if you don't want to wait, if you don't want to, take this correction, exit somewhere over here, 6,500, 6,600, and call it a day. Okay. These are just your various ways of taking entry, exit, or stop loss levels. How to, okay, so when to take a trade, I have told you. How to go about trailing stop losses, I have given you some methods. When to leave a trade, I have given you. How to spot breakout candidates a day before. All right. How to stop, okay, there are various screeners or scanners that you can go through. Okay, I will just post one of the scanners now on the group. Okay. Now that one scanner is something that I've been following for many years, 7, 8 years, and it has, sorry, 3, 4 years, and it has given me very good results. I can post that scanner, but see, once you run the scanner, it will give you a very big list of stocks. Okay, I have just posted that on the group. Okay, if you run the scanner now, it will give you a good list of stocks that are available. These are just MACD's scanners. Okay, once you list that stock, what you have to do is, once you run the scanner, what you have to do is, you will have to uh, sort it on volumes. Okay, you will get IRFC, RVNL, NHTC, Z Media. So now one of the stocks that comes up is Z Media. So if you then you go and plot the chart. So if you have Z Media, how does this chart look to you? Does this fulfill any of the conditions that I have given? Does this look like, does this pattern look like it will give good? Is there a crossover? What about my RSI? What is the RSI currently? 60. Is it bullish? Yes, it is bullish. What about ADX? Is it trending? It is not trending yet. But okay. What was that? Z? What was the stock? Z, not Z Learn. Z Media. Okay. What happened to MACD? MACD has crossed. It is just coming above zero. Okay. So this stock seems to be good. This is a weekly stock. This is on daily. On daily, this is looking to be very nice again. What happened to my MACD? See, MACD has crossed on weekly. Oh, sorry, on daily. It has a very good RSI. ADX is trending. What about volumes? Is there a volume buildup? There is no volume buildup as such, but it has shown a couple of good volume candles. So yes, there is decent volume buildup. So can you enter this stock? Yes, you can enter this stock. Can I keep this on watch list for Monday? Yes, definitely I can keep Z Media. Does this look like a CNH? It looks like a kind of a CNH. It also looks like an inverse head and shoulders in one way. Okay, yeah, if I look at weekly, it is not an inverse head and shoulders, but it is a good pattern. Okay, it is making a good pattern on a longer time frame. There is a decent volume that is being built up in this one. Can I take Z Media? Can I look at Z Media? Yes, of course I can look at it. So yeah, this is just one example. I ran the scanner. I saw Z Media. I see that this is how I have shortlisted the stock. I will look at it tomorrow on morning, first 15 minutes. This looks very good. Where are the resistances currently? 16.3, 16.8 is the resistance. But and what is this thing? There is earnings coming out on Monday. Okay, that is about okay. This 22nd July. We're still aware. I feel that this is something that can do well. If this does well in the next first 15 minutes or so, I can add this for a target above 16. I can see a target, I mean, the targets of 18 and 20 or 19.8. Okay. This is fulfilling all my criteria. This has given a very good close. I think this will do well. Now, if you are telling whether this will hit upper circuit or not, see, quite frankly, I don't take a stock expecting it to hit upper circuit. It just hits upper circuit. If it hits, if it is going to fulfill all your criteria, it will move well in almost all possibility. There can be, when you remember this one stock we had taken response in, it hit my stop loss. Okay, response in, when I took response in, it was in the middle of the day. It was on this candle, correct? It was somewhere over here, 130, 131. It was fulfilling all my criteria also. MACD crossed, ADX was trending. I did an extremely good, RSI was very good. There was a very good volume build-up. Everything looked good. But even then, you see what happened to the candle. This is the candle on 3rd of July. The candle gave a very bad close. Next day it was still fine, but yesterday it was very bad. It also closed below 200 EMA. It is still, I mean, if you look at the structure is still fine for those who are holding. It is not completely broken, but it closed below 200. See, as far as I am concerned, I take a trade based on, I want this to happen. I want this to be break this particular trend line, and I want it to hit 348, which is my first target, and then, give a very good uh, move. Since that did not happen, I have exited. Okay, now there is a possibility that tomorrow it can reverse from here and go up to 348. There is no point in looking at possibilities. What do I see here? I see that whether it is on daily or whether it is on weekly. If you look at weekly, also this is not the most best of candles. Okay, the RSI also has dropped drastically. So I have exited this based on my criteria. So I've given you two examples of what can happen good, what can happen bad. Okay, once you take a stock, you cannot guarantee that it is going to run. Nobody can guarantee. You take it on the basis that, on the basis of my understanding, it looks like this is going to do well. If it does not do well, that is why you have a stop loss. If it does not do well, you exit. Because, okay, if you look at a much higher time frame, you look at monthly time frame, then yes, there is some decent consolidation going on. This might take another 1 week, 2 weeks, 3 weeks, whatever, to come back in, but I will lose that opportunity. What happens if the market drops down drastically after 3 weeks time? This will go down to 254. It is going to take me, 6 months for it to come back. Everybody knows about this Navkar Corporation. The same thing happened. Okay, Navkar Corporation, we have taken an entry somewhere in February. Considering this breakout, the stock reversed from 200 and 120. I remember 119 or 18 or 120. Somewhere around 118, 120 is our entry. From 118, it went down to what, 80. It went down to 88. Correct? And part of the stock I am still holding. I was still holding it. It will break out. It will break out sometime. I know it will break out. But how much time from February till July? This is what, 4 5 months. 5 months if you are holding a part of the stock. So there are some people who are holding a full amount of the stock. You have wasted that opportunity, for you to make good money from that capital. So it has come back here. Maybe next week or something it will break out. I will make some money over here. But this is basically irrelevant. Are you willing to take this fall? This fell once, it fell twice, it made a double bottom, and then it has come up. Right? Now, this double bottom that has come up, it made, is okay. If you don't see, in swing trading, cash is your king. This is a waste of my cash. this position, even if I make 5%, 6%, 2%, 10%, whatever I make over here, this is a waste of my time. My actual target was 147. My entry was 120. This was 19 February. I am expecting to make this by or 2, 3 weeks holding, 1 week holding, whatever. Now, if I have to keep that cash for 4 months, or I don't know, this might be another 2 months before it hits this is a waste of my capital if it is swing trading. Again, if I'm looking at making money out of this in a long term perspective, then there is no problem. Then we keep on holding it. But there is 147 should come. Okay. But if your use is, if you have entered on the basis of short term or swing trading and you are going to exit on the basis of long term, it makes no sense. If you have entered on the basis of long term in Naukar Corporation, I have no idea what Naukar Corporation does. If you think that this is very good fundamentally, okay, then what you would have done, you could have probably entered here, you would have added more because you have more confidence in this and you will take it to 148 and maybe you will take it to 270 also. I don't know. Okay, but I have entered it under what premise? I have entered it under the premise of swing and I have exited it on the premise of swing. I have around 20-25% only of my initial holding here, which I have kept. A lot of the holding I exited on the same day. Okay, when it failed breakout. Others I have kept and I will exit it somewhere. Okay, so this is one of the ways of, I mean, this is a way where it failed. The others is ways where it succeeded. Okay, once it succeeds, a lot of times it will succeed. There will be 2 or 3 times out of 10 when it will fail. But it is very important that when it fails, you get your cash out if you are in swing. Okay, because if you get your cash stuck here, then your cash is stuck for the next 6 months. You can do nothing with this money. So you are just stuck. Okay, so yeah, so how to spot breakout candidates a day before, how to enter a day before. I mean, how to decide when to enter a day before. I have given you one of the scanners. You can run that. It is not. It is a positional scanner. It is not. I mean, a positional or a swing scanner. It is not an intraday scanner. You can understand one day before. That is a scanner basically for people who are not on screen, who come back after work. You can run it at 8 o'clock, 9 o'clock, 10 o'clock, whatever, one day before. Shortlist your stocks and enter it. Reversal from which EMA, etc. I have already told you. Okay, so in basically these are the uh, main points that you look at when you are entering or you are exiting. Okay, this is what I look at in totality. Now, for someone who has been in the market for a while, this would make a lot of sense, and they would, take some pointers from it because it is very difficult for someone who has heard this in the last 1.5 hour to replicate. However, once I share this PPT on the group, what you would have to do is go through each and every point, go through your charting software, try to make as much sense as possible from each and every aspect from it, from Google, from videos, do self-learn. And the only way to understand, see, because once you see a chart, what happens is, if you that chart should be able to speak to you. Okay, you should be able to look at the chart and say that, okay, this is what is going to happen based on uh, after looking at all of these things collectively. And that will only come when you chart, like, you have to spend, if you spend 7-8 hours a day, or if you are not at work, then you are spending 7-8 hours on a weekend, and you do that continuously over a period of few months. That is the time when you will understand what this chart is actually trying to say. Okay, you have to put in hard work and efforts, like I said before. That is the only place where you can uh, understand what that chart is trying to tell me. Where to exit? A lot of people had this query, where to exit. I think I have, in a way, told you where to exit, how to trail. So you're trailing, again, I'll repeat this. Trailing would be on 9 or 21 EMA. 9 or 21 EMA trailing, depending on what is your view. If your view is very short term, then 9 EMA. If your view is long term, I mean, a little bit medium term at least, then at least daily close. If it is long term, wait for weekly close. But remember, higher the time frame, higher the reward, higher the risk. A shorter time frame fellow might have a risk like I showed you on Matchdoc of 20 points, but his target might only be 50. He will be able to capture only 50 or 60 points on 100 points. A long term fellow, his stop loss is 400 points, but he will be able to capture maybe 1000 points. Okay, so you will have higher risk, higher reward, lower risk, lower reward. What do you actually want to do is uh, something that you have to decide. Okay, the other way to exit or other way to find out what is your target would be to plot a fib ratio on your chart from the low to high. Whatever are your fib ratios, those are mostly 9 out of 10 times your stop will face resistance there. Do you want to exit or not, fully or not, is again up to you. There is no point in exiting just because the stock fell down 1%. Okay, look at the complete structure. Is the when you look at the structure, is it still within all the EMAs? Is the structure still good? If the structure is good, don't exit. If you know about the company, if you have confidence in the company, don't exit. Okay, this the third point about how, if you are into swing, how much percentage do you have to exit? You can follow a strategy of, see, once you are able to plot this, you will come to know what is the first target, second target, third target. So at the first target, you exit some parts, let us say 30%, 40%, 50% based on your conviction. Leave the remaining, trail the remaining to your second target, trail the remaining to your third. In whatever case, you are not going to have a, a loss, correct? Once you make the first target, you have already gained, say, 7, 8, 10%. You have already booked 50% of your or 40% of your capital invested. You are in profit. If not, you have to change your trailing stop loss to cost. Okay, or slightly below. If you have gained 10 points, you can have your trailing stop loss for the remaining 50% at, let us say, 3 points below cost and trail for higher targets. Again, what is the top, what is the bottom, or what is the top? Nobody is able to predict. But don't get panic seeing that, I made 20%, I made 15% in 2 days. I think I should exit. No, no, no. Just because you made 15%, there is no reason to exit. You can make another 20%, you can make another 40. But if that 15% day and the candle closes at a resistance, you can choose to exit a part of your uh, profit. Okay, trail it to whatever stock that you are holding now, put that on your chart and trail it to 9 or 21 AM. Okay, trail it to 21 AM and see, do you really need to exit that stock? If you don't need to exit that stock, then don't exit. Other way to look at it is, what is the previous swing high? The previous swing high will always be the first target. When the stock is falling, okay, whenever your stock is falling down, if you are in a very long term basis, what is your very something that is, you can say, the deepest stop loss. Your deepest stop loss is your previous swing low. So price moves in swings till such time that your previous swing low is not hit, regardless of 9 EMA getting hit, 21 EMA getting hit, whatever EMA is hit. If your previous swing low is not hit, you can choose not to exit that stock. Okay, but this is only for people who are in it for the long term, who have confidence in that stock. So if you have confidence, so a few days ago, somebody had entered, had given one bank, Ujjivan Small Finance Bank, correct? And there is a good fundamental analysis given on that. If you chart Ujjivan, okay, I will just chart that bank for a minute and then we will close our. Okay, let me share this screen. Okay, this is Ujjivan Small Finance Bank. All right. If you ask me on technical, I do not have any entry point here. Can you? I do not have any reason to enter as of yet. Okay. There might be after a few days in case there is a MACD cross, but MACD cross is way below. I need an MACD cross somewhere over here. Okay. If you look at the trend is extremely bearish. Not extremely bearish, it is decently bearish. If you look at MACD, it is sorry. If you look at RSI, it is way below 40. This is on daily time frame. On weekly, there is nothing. However, the person who has posted it, he has some reason to post it because he has a fundamental analysis that he has done. He has complete, uh, you know, he has complete confidence on what his fundamental analysis is. So keep following this Ujjivan Finance Bank. Ujjivan Finance Bank, if I have to buy, if a technical person has to buy, will come into his understanding only when one of these criteria is met, which I have told. Okay, so but on a fundamental level, if this is a buy, this can be a very, very early entry. Okay, I will probably not be able to buy this bank below till the time it comes to above 50, 51. Current price is 44. That is around 15% higher. Okay, a technical analyst will probably buy this bank at a price which is 15% higher from what it is right now. Do you understand? If you so the method that you guys follow is completely different from what I am following is completely fine. Okay, as long as you have complete confidence upon what you are doing. Okay, this is just an example that I'm giving you of see. For me, what happens is this 200 SMA for a technical guy, a 200 SMA is 53. Price just now is 44. This is almost 15% difference. Okay, I will not be bullish or I will not enter completely unless and until this 200 SMA is taken out because 200 SMA always plays a big spoil sport. But a fundamental person is not going to take a look at this bank for 1 week's time or 1 month's time. His lookout is probably 6 months, 1 year or more. For him, it does not make a difference. But for me, it makes a big difference. Are you understanding the difference between the perspective of uh, trader entering on uh, technical analysis and somebody who is entering from an investment point of view? There is a big difference. So if you are already invested, so if you are say invested in something like Tata Motors, on a fundamental point of view, what is your previous swing low? Your previous swing low is something like 858 or 900. So if you are already invested in this one, your previous swing low is 856. 856 is also a 200 SMA support currently. If you are already invested, these small way, this whatever falls that you have had over here, it has come down from 1060 to 900. It makes no difference for you because your lookout is for the next 2 years, 3 years, 5 years, whatever. And you have probably invested at a lower level. Okay. So your biggest, this thing is going to be 851. So can you, as a investor, take this loss if this goes from 1016 to 854? Yes, you can because your target is not going to be 1015 to 1077. Your target is probably going to be 2000, 1500 if it is fundamentally viable. I don't know if it is fundamentally viable at 2000, but if it is, then why do you want to exit? Like I had given you ACE. Okay, ACE has been ACE is also doing the same pattern like it was giving for uh, Tata Motors currently. Okay, this one can be a breakout very soon based on this HVC candle. But what are you going to put as your stop loss will depend on what is your view. It is a very strong small view 1482, but your very small view 1482, your very small target is going to be 1699. Okay, if you have a slightly bigger view, your stop loss is going to be around 1400. Okay, that is 100 points. Okay, if you want to have a much bigger view than that one, what is your previous swing low or something out here? You have looking at 200 SMA, you have 1100 or 1076. 1076 is 500 points. Who can afford these 500 points? The only person who can afford these 500 points from is somebody who has complete confidence in ACE. So don't ask me whether I can afford, I cannot afford. You only if you have a fundamentally confidence in ACE, you will not let go of this stock. You will only add at 1100, 1200, you will add at these levels. If you don't have confidence, you are only looking at it from a swing point of view, then no, you will exit it somewhere around 1450 and you will try to buy it for 1400 or you will try. So when I say if I have to buy at high, what does that mean buy at high? What will a swing trader or what will a technical analyst do? A technical analysis guy will buy. If even if I am giving a buy call on the group, I will give a buy call on the group at 1610 plus. Okay, 1610 plus, and if I look at this one, I can see that this is moving in this range. This range is 1370 to 1600, so that is around 100 130 points. My 130 points is my range over here. Okay, so this is my buy trigger. A close of some candle, even this, I mean, a risky candle will be 15 minutes. A decent candle will be 1 hour. A non-risky candle will be a day close above 1610. Anybody wants to buy a 1610 above, I would say buy. Okay, 1610 above, where will he face resistance? He will face resistance at 1650. He will face resistance at 1700. Why will he face resistance 1700? 1700 is all-time high. Okay, many people who have bought over here, they are going to want to exit. Okay, so 1700, you will face resistance. You can see this volume candle. High volume candle is at 1602. So any close above 1602 will be very good for ACE. Okay, I am just trying to give you my thought process or thought process on how to trail or how to enter stocks or how to go ahead of this. So every stock, every this thing would have. I mean, the entry exit criteria would be the same. The only thing that will differ would be what is your view of that stock? What is your view? Why have you entered? Okay, when you go through this thing, the first point I said is why did you enter this stock? Did you enter it for swing, for long term? Did you enter it for medium term? I don't know. Whenever you are entering, if you are entering at 1487, can you afford this 100 point stop loss here or 70 80 points? If you cannot, then wait for 1400 or wait for 1600 plus. Why 1600 plus? Because over 1600 plus, your stop loss is just this 1500. Sorry, 1560. So you just have these 30 points because by then your EMS will have come here. Small stop loss for a swing trade. For Okay, I hope I'm making some sense for people who are listening. All right, this is in general what I look at when I'm entering stocks, or if you wanted to know what I am doing, how I go about doing stuff. Okay, so if there are any small questions, do let me know. Otherwise, I will post the PPT on the group. Go through it, practice it yourselves, and I'm sure you will be able to do it. Yes. So if there are any questions, do let me know. Otherwise, we can close the meeting. Yes, sir. You can unmute yourself and ask the question. Shruti.
Sir, how did you arrive at the 24567 for Nifty?
Okay, I'll show you. So this is 24567 is not out of the blue. Okay, there is uh, see a easier way to look at Nifty is not necessarily the Nifty chart. Okay, you can also look at the uh, gift gift Nifty chart. Okay, let us go to Nifty first.
Sir, can you please tell the ADX settings?
ADX settings are default. There is no change in ADX settings. Just change. See, for me to understand ADX, if you go to the DMI indicator, you have DMI plus, DMI minus, and ADX. These are the three lines. So DMI plus I put as green. I just change the colors. DMI plus as green, DMI minus as red, and ADX as black. For me to understand, there is no other change in setting. Okay, so if you look at Nifty, okay, if you look at this is your Nifty overall big what do you call it, the chart. Okay, if you look at the indicators in Nifty, you will be very surprised to know that the trend of Nifty is flat. Okay, this is my ADX. ADX is at 16. Okay, the ADX is not trending. This is not a trending market, which is why you see all these stupid candles. And why is it not a trending market? Because if you, like I said, DMI, this you see this one big red candle. This has taken away. Your ADX was never trending. This market has not been trending since. Uh, I mean, it was downward trending. No, yeah, okay. The trend stopped around 25th of Jan. Okay. So how did you come over here? If you just draw trend lines to whichever, see, I have just drawn trend lines over here. If you can see, when did I give 24? I gave this target in June or was it May?
Yeah,
Was
I
it May?
remember seeing it on the 3rd June when we fell.
On 3rd June, I gave this target of 23456. No, it was I think much before. I don't remember when I gave this target. This must have definitely not been in June, maybe in April or May. Okay, this is possible. So I probably might have given the target somewhere in April or May. Okay, for 23456. Can you see 23456? Yeah, can you see this on the screen?
Yes, sir.
0.382 here. So this is see 23456 is a very nice figure. 23456. This is why I gave 23456. Okay, and my next target that I gave is 24567. Okay, this 24543 for I can see 24540 over here. I've just given 44567 because there is might hit 24567.
Oh,
This is not based on if you look at your ADX or if you look at your RSI. See, look at RSI for Nifty. RSI for Nifty generally it reverses from 40. Okay, a lot of the times your RSI will reverse from 40. Where is my RSI now? RSI is on 70 plus. RSI is extremely trending. It is extremely bullish, the market. There is no point in shorting this. See, this market, even wherever it goes, even if it comes back to 70, you can try to short the market only when it goes, you have a major support on RSI on daily basis around 68 RSI, 68, 65. You don't short this market position till the RSI closes below 65. or 67 at least. Okay, intraday आपको जो करने का है वो करो, but आपको जो positionally short है ना Nifty, do not short this below till it closes below 67. This market is extremely bullish. It is not trending. This is not an RS. This is not RDX mode. You know why it is still not trending? Because look at the trend. That see, this is just momentum. This is just a momentum that is bullish. Okay, which is why I said it is a little difficult for you to understand between momentum RSI and ADX. It takes time. Your momentum is bullish, but this trend is not very bullish yet. If by some chance your trend, this ADX goes above 20, okay, your target is not 25. I don't know what your target. Your target is close to 26,500 or above, and this 26,500 or above can come in a very short time. If this ADX, if this ADX process on a daily basis 20, there is a long way to go. Okay, so I don't think that will happen, but there is a possibility. But in no case is this a market where you can short. Bank Nifty, on the other hand, is a different case. Okay. Bank Nifty was trending. Yeah, Bank Nifty was trending bullish, and even with that short fall of whatever points that you had, okay, Bank Nifty is trending bullish. Nifty is not trending bullish. Nifty has a bullish momentum. Bank Nifty has a bullish momentum and trend. Okay, but look at Bank Nifty momentum. What is the momentum? Momentum is dropped below 70, correct? So momentum is not 70 plus. But if you look at Nifty, momentum is 72. But if you look at trend, Nifty is not trending at all. It is just at 15. But if you look at Bank Nifty is trending. It is 21. Okay, that is the difference between trend and momentum. So this is not a market to short. Again, your small cap index, even though your small cap index is at all time high, what is the trend? It is nothing. There is no trend in small cap. What about mid cap? Mid cap is nothing. There is no trend. There is only momentum. This is not RDX mode. Okay, even though you have very good momentum in both small and mid cap, trend wise there is it is see how much. Why? Because if you look at the high, previous high, or let us say you look at Nifty previous high. Nifty previous high over here was 23,350. Now it went to 24,350. There is just a 1,000 point move. 1,000 point move has come in a month and some. Okay, if you look at 30 days and 1,000 point move, in terms of percentages, there is hardly much. Correct? So though we are dancing and we are saying a new high every day, it is basically it has done nothing much. That is why when you look at your ADX is not trending at all. And if you look at your MACD crossed near zero. When did this happen? 17th of May. Yes. What was the price on 17th May? This is what daily candle. 17th May price was 22,442. 22,442 of 17th May. MACD crossed near zero. If you remove this one abnormality from 17 May, it went from 22,400 to 23. This 1,000 point move in 7-8 days. Correct. This MACD cross near zero is extremely powerful no matter what. Yeah, this is Bank Nifty. Bank Nifty MACD cross is 23rd May. What happened on 23rd May? 23rd May was we were at 48,800. 1, 2, 3, 4, 7, 8 days we went to 51,000. 3,000 points. Right? You look at any stock. If you find, that is why the screener that I gave you was MACD cross plus. You can just the people who know you can use the screener. You can shift it to instead of 0 to maybe minus 0.5 or small differences, 0.5 or 0.10 on a daily basis or a weekly basis, and you will get powerful stocks. Okay, so all of these targets that are there are based on fib ratios only. It is not based on anything. When I'm telling you don't short the market, why am I telling you पी लोगे तो लफड़ा हो जाएगा? पी लोगे तो मुझे इधर किधर भी on whatever this thing daily or weekly positionally, I am not seeing anywhere that this market is currently going to move down. The only way for this market to drop down, if the reason I am not overtly, I'm saying that it will never fall down or ऐसे कुछ नहीं होने वाला, because see the trend is not bullish. If the trend is not bullish, but the momentum is bullish, it only requires one, one big fatka. Momentum can change very soon. Moment trend to change takes time. ऑलराइट, बट अभी तो ये ट्रेंडिंग ही नहीं है मार्केट, ये मार्केट तो सिर्फ मोमेंटम में है. अगर मार्केट मोमेंटम में है तो इसमें आप बी कॉशियस. ओके, राइड द मोमेंटम, बट देर इज नो ट्रेंड. Where was a trending market? You want to see where was a trending market? So Nifty, I will give you an example. You just look at your ADX. ADX trend about 20 कहाँ गया है? इधर है, Jan 2024. This was a trending market somewhere over here. When it went from 21,000, your trend lasted till where? The trend lasted till around February 24, 1 month. So Jan से लेके February. So this one over here. This over here, you had a very good trend. If you look at your stocks, etc., or anything that was moving in Jan, probably you would have done well. But over here, what is happening is just momentum. You can see once you, if you are just looking by at this one in itself, and you are looking at RSI, this is giving you a false picture. Okay, I also showed you about. I also told you about divergence. Of course, 2 points divergence does not make any difference unless and until there is a reversal. But even if you look now, look at this divergence and look at this here. Can you see the divergence? Here, this is my, I'll just make it into red. This is one trend line. Okay, this is not a valid trend line because there is no uh, confirmed reversal yet. But this is my trend line. And this is my trend line in RSI. There is a massive divergence in trend line. So if you look at a broader picture, the market is in momentum. It is not trending. There is no strength in the trend. There is a negative divergence. So you ride the market till the momentum persists. That is all that you can do currently. See, if it becomes a trending market, then you will see something that you have not seen in ages. But looking at the divergence, I am more, leaning towards a decent correction in the market whenever this, momentum ceases to happen. All right. Anything else?
So can we use pivots for resistance and support, finding resistance and support?
Yes, see, pivots I have never used because I never felt the need to use it. People are using pivots. Like I said, there are people from my group also who use pivots and they are doing an excellent job using pivots. So if you understand pivots, see, whatever system you follow, if they are giving you results, then please follow that system. Don't change it to suddenly try drawing trend line and something else, because you will not understand it. If you are using pivots and you are getting good results, continue using pivots. There is no problem. Because pivots are a way to use to find out resistance and support, correct? Am I right?
Hello, sir, Girish here.
Yeah, yeah, I agree. Yeah.
Yeah. So, as you said, that when market crashes, definitely the industries are not going to get closed, and you can continue. Now, in this current market, as you said, that there is no trend, but it's a momentum, and whenever the trigger comes, it is going to correct very nicely. Now, for
That is
all
my
those,
expectation. Yes.
yes, sir. Now all those stocks where we have really have some good percentage gains with us, and we are holding them for long term. Now, what will be the levels that we should look for to add them? Because we really, as you said correctly, that those industries are not going to get closed, and these are the stocks which are holding for long term. Now, which levels that we can look
Okay.
for to add them?
Okay, so now I will tell you there are two ways to it. So we will talk on Cochin shipping because both of us are holding Cochin shipping on long term,
Correct, sir.
correct?
Correct, correct, sir.
Okay. So Cochin shipping we have made 200% plus, right? Now
Yes, sir.
you are in almost all probability not going to get the price that you entered in again.
Correct, sir.
Right? So what do we do with such this thing? Now, if you look at Cochin shipping, if you look at the monthly RSI in any shipping shop, it is 95 plus. This is not sustainable. This has to come down. Now, this has to come down to what level? It has to definitely come down to at least 70. At least 70. A difference of 20 points in RSI or 25 points in RSI. If you
Sir.
go to Google and search how to calculate RSI, you will understand is not it is going to lead to a decent correction in the mark in the price,
Sir.
okay, of the stock. But it is so 70. Once it comes to 70, you have to see whether it is staying at 70 or going down, because this our shipping stocks are currently in RDX mode. RDX mode retest level is RSI 70, and it will change from 70 and go up. You know that all. So
Sure.
the first thing you look at, add on. If you want to add on, if you want to book out, you please book out now, today, tomorrow, next week. I've already told you. There is,
Sure.
because good game. So you can also maybe get down or get out of your initial capital plus 50% and, just let the other go to wherever it is going without stress. If you want to add on,
Correct,
you
correct.
look at the first level to look at is RSI 70. Till the time RSI 70 is not reached, you do not add on. Okay, no matter if
Right.
9 EMA it reaches 18 EMA, there is no point because it has just reversed from 18. So if RSI goes to 80 from 90 and it reverses from 80, so there is no problem. No, you are still doing well. Once it comes to 70, there will be some decent correction in the price. That is the time where you look at the price. Where is it? I cannot, today predict where the price will be at RSI 70 on that time frame. So at RSI
Got
70,
it, sir.
you look at the price. Is it at some support? Also has that RSI reversed at 70. So you don't buy at 70. Let there be reversal, because if it goes down from 70, then you have to plot an RSI graph and see where does it come down. Then you take a call over
Got it,
there.
sir.
But currently there is no point in doing anything till it reaches RSI 70.
Right, sir. Correct, sir. Thank you, sir.
Yes, Abhiruchi Huda. You raise your hand.
Yes, Sandesh sir, I wanted to ask one thing. It's a very generic question. Like you mentioned about Nifty being in the distribution phase right now. And as far as swing trading is concerned, like what will be the next plan of action? Like if you expect a correction from here, then at what point you feel you will enter in the market again for swing trading?
Swing trading, you can keep it on. There is no problem in swing trading. Swing trading, you can enter tomorrow. There is absolutely no problem in swing trading. If you want to enter with a point of view of investment, so today if you tell me I want to invest in one stock, tell me one stock, I will tell you don't invest.
Okay.
Okay. But if you
Okay.
want to enter in swing trading, for example, I gave you, now we just discussed two, three stocks,
Yes.
Z learning, and, so if you find those are good, uh, you can enter them on Monday. There is no problem. We have entered a few stocks on Friday also, but those are strictly swing trading, because see, if this market see, I am telling you if, because I do not know if it is going to fall down so fast. Okay, but if this market falls,
Yes.
you are enter swing trading in small and mid caps. Small and mid caps can see a cut of 30-40%.
Yes, absolutely.
Okay, if you are seeing a 30% cut, for you to recover 30% is going to take, sometimes takes a year. I have gone through it. I know it. Okay, so
Yes, yes. That's what
I,
I meant actually. You have been in the market for
yeah,
such a long time, so you would be knowing. Like what I have heard generally is that when the market is sideways, then we don't earn much in swing trading. Is that true? Because I'm relatively new in the market, so I have not seen that phase.
no, no, no,
I
no.
have,
See, in any market, as long as the market is not currently, even when it is, see, if you don't know how to short, the only market you cannot make money is when the market is falling. All
correct.
right, that is the time when you just keep quiet and try to enter at different levels. But otherwise, even see, even if the market is sideways, the general market is sideways, right?
Right.
Even yesterday, uh, sorry, on Friday, Nifty and Bank Nifty was down. The Bank Nifty was down what 700 points at 600 points, I think, at one juncture. But
Right.
what about your small and mid cap index? Small and mid cap index was up. Your portfolio was up. We were at the four, five stocks hit upper circuit. There is no problem. So you will always be able to find the opportunity in small and mid cap index, even though it is a sideways market.
All right. All
But
right.
in a
Yes.
in a bullish market, you might find 10 stocks. So in a sideways market, you might find two. The skill is to find those two.
Okay. So, in that kind of market, like there are so many ways one can enter into the market into a particular stock. But what is your exact strategy? Like the one you mentioned, you follow that only like in the day of election when election result when the market fell. What exactly at that point of time you look at what kind of stocks you pick according to the
When the
theme or
market
according
fell,
to the.
no, no. See, if you were on the group just the day before the election, I
Yes.
had exited decent amount of, not decent, some amount of stocks. Okay, I had cash in hand on the day of election. On the
Correct.
day of election fall, okay, I will. If you look at the chart, see, everything is by the chart. Okay, you don't go by
Yes.
uh,
Uh,
just
theme or
nothing.
anything. It is the charts which.
You have to look at the chart itself. So on the day of the election, okay, I'll just share the chart again. Why did I? And I entered five, six stocks. So people who are there on the group, some of them also exited. Sorry, entered. Okay, let me just share and why I entered.
Yes.
Okay, now you are looking at Nifty chart. Okay, this is Nifty. Is it? Can you see the chart? This is the day of election.
Yes.
Okay, this is the day when I exited some stocks. The day prior to the election. Why did I exit that day prior to the election? Because if you forget everything on top, this was my trend line. You see where this thing has closed. This is closed at. Uh, this is a weird place to close. Okay, there was nothing. There was no support. There was no resistance. This was not. This was basically not very good. Not very good. Nahi. This is. I did not have a basis for this close. So I booked some profits on this day. Not all, but I booked some profits. The next day when the market fell, this is 200 EMA, 200 SMA. Okay, so the
Yes.
market, even though it fell uh, very miserably on that day, look at 200 EMA. Did it take support of 200 EMA or not?
Yes.
Yes. So
Yes.
200 EMA, if it, for me, the stress level is when the market will close below 200 EMA. If this thing ever happens, the market closing below 200 EMA, this has never happened. You look over here, see, thoda sa, when was this? 23rd, 27 October 23. That also, that time also it fell very well, but it took a support of 200 EMA.
Yes. Correct.
Okay, so on this day, we bought five, six stocks once it reversed from here.
Yes.
Okay, so there was no problem as such to buy stocks on this day. The stocks that we bought were, I think, Power Finance. We bought. I think we also bought Cochin in. So there's all quality stocks that we bought on those dates for. swing trading. Some we have kept even now.
So those
So
were like
in
fundamentally
panic,
good. Yeah.
yes. Fundamentally good stocks only because see now everything turned out well. Okay, but on this date, if you are following the election results, we did not know whether Mr. Modi is coming in power or not.
Yes.
Okay, we don't know what is going to happen. We are buying. We did not buy. At the end of the day, we don't know what is going to happen tomorrow. Whether there is going to be support, there's not going to be support. I have no idea. So there is no point in buying some junk stock. We only bought stocks that were good quality. That if tomorrow if they fall down, I will still add more because after what 1 week's time, this is going to settle down. I know. Even if Mr. Rahul Gandhi becomes the prime minister, what happens? Adani is not. Reliance Industry is not going to close down. Cochin Shipping is not going to. Nothing is
Correct.
going to
Correct.
happen. Okay, the best returns in the market basically came when Manmohan Singh was the prime minister. So there is there is no point in looking at BJP and this and that. But only thing I am looking at is this fall. If this fall has happened, where did this fall happen? If you look at this, it happened exactly at this trend line. If you ignore the election result, okay, completely, you forget that there was election result. You look only
Yes.
technically. This fell from from the resistance. It took support at a proper long support. Finished. Election is early. Then does this make sense?
Yes. Correct. Absolutely.
Yes. So it makes sense. So then, but looking at this unnatural fall, because on this date, Bank Nifty almost hit LC. This is not a yes. So looking at this unnatural fall, if you are entering stocks, you enter stocks that are only good, which which are which that will do well regardless of what happens. Power
All right.
Finance, IRIDA, no problem. You can enter them. So tomorrow when you are falling, the first stocks you enter are not going to be some penny. You enter some stocks that are good.
Correct. Correct. Got it. Thank you so much.
Uh,
Sir, what time frame should we use for swing and what time frame should we use for positional, sir?
So swing trading, you use see when you're looking at charts for swing trading, they look only at daily. So if the week is closed, you can look at weekly. Between the week, you look at daily and hourly time frame. You take entry based on 15 minutes.
Okay, sir.
If you are looking at positional, there is no point in looking at anything lower than hourly. You only look at what happened for the close. You only look at the last hour. There is no point in looking at hourly. If you're looking at positional, you look at daily, weekly, monthly, quarterly.
Got it, sir. Thank you, sir.
Sir, Sunil this side. First of all, sir, thank you
Yeah.
so much for conducting this session, and it was great learning. Sir, my question is a slight off track to the technical analysis. Usually, sir, when we hit the stop loss or no consecutively, so we hit the stop loss, we get panic and our mindset not work properly. So does it happen to you or no? In such situation, what you do, sir? Because you have mentioned that there were many stop loss which was hit by your stocks also. So is there any
Yes.
like thing where we can control our mindset? Because sometimes I personally this my personal learning that when consequently stop loss gets hit, I started to take wrong calls or wrong